Hey everybody, welcome back to the channel. We continue with the Dow Chronicles. And today's stock is going to be the Walt Disney Company. Ticker symbol DIS. Okay, here we go. Market cap 170 billion. PE ratio 54. That's high. Earnings per share $1.71. And no dividend yield, although apparently Disney has been making announcements that by the end of 2023, the dividend is coming back, and we'll talk about that. But right now, there's no dividend. The analysts say it is near fair value. Okay. Now, right now, Disney is $93.57. Okay, the highest it's ever been looks like February 1st of 2021 at $189. So that's quite a big drop. That's a very big drop. So there we are with that. Let's go down and take a look at the revenue here. Well, let's see. So the revenue's been going up since 2020 nicely. And earnings were down in 2020, but they've been coming up. Now they were negative in 2020, now they're positive in 21. And even better in 2022. Okay, so all that looks good, right? Okay. Let's go to statistics and see what they got going on. Let's see, trailing PE of 55, forward PE of 24. Okay, profit margin, 3.93%. That's barely, that ain't much. They're making money, but it's close, right? Operating margin, 7.94%. Return on assets, 2.07%. Return on equity, 3.5%. Let's go to cash and debt. Total cash, $8.47 billion. Total debt, $48.38 billion. Okay. Positive operating cash flow of $5.25 billion. Positive levered free cash flow of $4.86 billion. Okay, that's all great. And no payout ratio because there's no dividend yet. They used to have one. They're going to bring it back. But before I give you my final word on what should be bought here, let's go to the analysis and see the sales growth. Sales growth, 2023, 7.7%, and next year, 6.3%. So that's all good. It all sounds pretty good, a slim profit margin, but it all sounds pretty good. But here's my opinion on Disney. No, don't buy it. And I know a lot of people are going to disagree with me, but here's why. They're paying you a dividend, then they're not paying you a dividend. You can't trust that. How are you going to trust that? No. Now, look, I love their shows on TV. Their Disney Channel is getting better and better. They have some really good shows on there, especially the past couple years. I mean, they're knocking it out of the park. I'll give them that. They are. It doesn't mean I want to buy their stock. Through the years, it's been up and down all over the place. Some years there's negative earnings, not just 2020 and was a big one, but because they had to close the park and all that. And they're just too unreliable, and I don't like they took away the dividend. Now they're going to give it back. And no, there's better stocks out there. They haven't made that much. Their stock hasn't done that great. Like I said, back in 21, it was, 180 something. So, and now it's 93. So now I know what a lot of you were thinking. You're thinking, well, wouldn't now be the time to buy since it's lower? Okay, you make a point. But for long term, no, I don't trust them enough as a company. I don't. I think they're too all over the place with what the stock price is too much. It's up and down, up and down. I don't think I'm going to make as much money as I could somewhere else. Maybe as a swing trade if that's what you're into or something. I'm not. I don't suggest it, but there it is. So, buy, hold, or sell. If I held it, I probably wouldn't sell it. Okay? I would probably hold it till it goes up. I'm sure it will, somewhat, But I would not buy any at all. So, short and sweet. There it is. That was pretty easy. So, thank you so much for being here. Really appreciate it. Bless each and every one of you. And until my next video, peace.